In fact, cut across to Ritu, who is with the management of RBL Bank on the sidelines of the Global FinTech Fest. Let's cut in.
FinTech Fest, right before it, the big topic of discussion has been the unified lending interface. Just briefly help us understand how it would benefit banks like you and how does it change the lending ecosystem?
How I understand it from my perspective, I'm just trying to share with you. ULI is going to be a game changer as far as a banker is concerned for the two reasons. Today, I get a kaleidoscopic view of my borrowers or the prospective borrowers. This platform may enable us to get a standardized view and much broader and deeper view of the borrowers' existing past transactions. That will provide us an insight. Second, it is going to bring in the digital data. Hitherto, it is in isolations and pockets elsewhere. So when you try to bring all that digital data onto the platform, it enables us to make a very informed decision and much more quickly than what we are doing it. So it is going to help us two things. One, assessing the right sizing or right borrowing ability of the borrower. And second, his other transactions with the rest of the financial institutions, which is going to help us out to understand better about his ability and capacity to undertake that particular business. So this will help the banks, in my view. Personal view is that it is going to bring them to decide quickly and decide precisely the size of the loan which we wanted to give.
So broadly, it will, deepen or rather strengthen your credit underwriting. But, if you could give us a sense of how much additional credit could this unlock, to the so far unbanked or underbanked sections, the MSMEs, the small rural borrowers.
See, MSME, if I recall somewhere in one of the assessment, it has been found there are 25 lakh crores of the credit is due to that particular segment, which they are partly being met through unorganized, partly met from borrowings from relatives. And in my understanding, when we get into the field, is that most of these MSMEs undertake a transactional-based borrowings. If we are able to facilitate them to do their business-based borrowings, so possibly their ability to do more will be their standard of business will also go up. So the opportunity is immense. In my view, if you were to put it very sharply, it is going to be a geometrical progression rather than arithmetical progression.
Well, a quick word on the business momentum as well. You had strong NIMs in the quarter, but the fact of the matter is this race for deposit accretion, the higher cost of borrowing perhaps, how will all that play into, how this trajectory will evolve in the future? Do you see, NIM sustaining at the current levels for RBL Bank?
See, as far as our bank is concerned, we were on record. We told that we will be flattish as far as the NIM is concerned for a couple of quarters because of that, the credit card transitional related slippages which we saw it in our book, which may stabilize and will normalize after 1 or 2 quarters. Thereafter, it will start inching up for the simple reason that the cost of deposit, no doubt, it is just inching up in, let us say, in single digit, and our yield on advances also inching up in double digit. So the mix of advances, what we are doing it, will be able to sustain this increase in the cost, which will flattish as far as the NIM is concerned, and over a period of next couple of quarters, it will start inching up in few bits thereafter.
So, on this deposit especially, for RBL Bank, again, it was down sequentially by about 2%. With the finance minister now also asking banks to come up with more innovative ways for deposit accretion, what sort of strategies do you have in place to, ensure that there is higher deposit growth? What are your targets for the year?
See, if you look at that, deposit is for the purpose of deployment. When you have a deployment thing, you'll be in a position to get an appropriate deposit mobilization. I wanted to look at RBL from a different prism. Like you look at it, look at my accretion in less than 3 crores and less than 2 crores, which was the earlier one. We have been consistently growing on quarter every year around 20, 22% and 24%, which we have a strong momentum. Our entire DNA has changed from that of the bulk deposit to the granular deposit. So the granular, what I mean is all our distribution centers, including my RFL subsidiaries, they are able to mobilize their customers for a low value, maybe 50 lakhs, 20 lakhs, 10 lakhs, less than 2 crores. That number is increasing multifold. So if we are confident that we will be able to sustain it, because there was a time that on an average we were booking around 600 to 700 crores per month, which went up to 800 crores per month as well. And we are confident that we will be able to maintain that momentum for the two reasons. One is our customer service, definitely a little notch up from some of the competitors who have been working with. And our rate of interest is also not way away from the competitors.
Okay, all right. So that is RBL Bank. But on that note, we need to take a short break. Up next,